This is the art of Startup War. And my name is Brian McMahon, your host and sensei. Here is what we know. 98% of startups will fail every single day, and mostly due to reasons outside your control. The Expert Dojo Startup Accelerator, we look to even up the playing field by sitting down with the greatest minds in startup investment right here in our studio in Silicon Beach, where we look to shine a light on your path to success. Now, our guests each week have invested millions of dollars into startups and are the most respected investors in the world. Now, they share all they know with you, the listener. So join us on Tuesday mornings at 10 o'clock Pacific Standard Time, starting off your week winning the war against startup failure. Today I am with Scott Alderton, who is a friend and infamous personality here in Silicon Beach. Scott's smiling, but he shouldn't be smiling because he is. Everybody loves Scott. I'm going to read a quick little bio intro and then I'm going to talk about the Scott who is my friend. Right, so corporate and technology lawyer, attorney. Why do you say lawyer rather than attorney?
No difference.
Okay, cool. So corporate, attorney. So if you're over in England, a lawyer, and if you're here, attorney, focusing on middle market technology and emerging growth companies, a former partner in the global law firm, the Atkin Group, Atkin Gump, Strauss, Hauer, and Feed LLP, and Troop Stuber. You've worked for a lot of companies with very long names, right? That's
why we kept ours short, Brian.
See, I'm going to come back to that one. Right, over 28 years experience working with technology and emerging growth companies, particular expertise, venture capital, angel, private equity, the things that all of you want to hear about, and other forms of financing and funding, software as well, technology, licensing and transfer, federal and state securities laws, capital formation, M&A, intellectual property, e-commerce, and the internet. Very frequent speaker on all kinds of matters on technology, intellectual property, and pretty much everything I just said below, and a member, of course, of the California Bar. Now, Scott is a partner over at a much easier name to say, which is Stubbs Alderton and Markals, LLP. And I want to talk now just a little bit about my more personal experience with Scott. So I first came here, as most of you know, 4 or 5 years ago. I met Scott pretty much at the beginning. At the time, I was frustrated by the lack of infrastructure for early stage startup, with the exception of Scott, because he and his firm did something which I pray every day that anyone else will do. And that's that they could have functioned perfectly well as an attorney firm, bringing in large clients, paying good fees, and earning a good living. And they decided that they were going to help the early stage startup market. And not just help them, but provide a space that the early stage startup market can come to, provide a pre-accelerator that those companies could not only have their fees covered until they reach some form of financing stage, also space covered, also mentoring covered, also introductions to investors, also any types of services that they need to help their business go forward, and really every single thing that a startup needs to be able to get started. And when I look at the space and I look at the amount of startups in there and I look at such a high proportion of the space, it is the absolute model, not just for attorney firms, but for any company anywhere in America. And he's not been doing it for a year or two, three or 5 years. How long have you been doing this for, Scott?
Well, the firm has been around for 15 years.
Yeah.
Been practicing in this space for probably 25.
Yeah.
And we've been doing the actual focus on the incubator and the startup model for probably about 5 or 6 years.
Beautiful. And I said, I was speaking, Scott very kindly invited me over to an event on Friday and I was speaking and I said there what I say today, which is, look, people like us, we just arrived in a couple of years ago. We try and do our piece and try and make a difference in the community. Scott's one of the godfathers of the early stage startup community and has been supporting this community from the beginning. And look, we're going to talk about venture capital. We're going to talk about, maybe Scott will throw in some ideas on protection as a startup and things you should really look out for yourself. But I want the overriding lesson at the start to be surround yourself with your allies. Surround yourself with people in the community who have already demonstrated that they're helping the community. So people like Scott and companies like his. So welcome to the show, Scott.
Well, thank you very much. I'd say you're far too kind.
So let's just talk all about entrepreneurship.
Sure.
What makes a great entrepreneur?
What makes a great entrepreneur?
Is there
Wow.
a formula? There's no formula, right? Maybe
Yes.
a little formula?
I think somebody who's a risk taker for sure. Somebody who has maybe more ambition than common sense. But
You've ticked all my boxes so far.
But I think it's somebody who, it's really, this sounds so cliche, but it's really somebody who wants to change the world. I mean, it's really easy to get a corporate job, and it's really easy to make a living, and it's even easy to make a lot of money, but it's really hard to step out of the box and do something that everybody tells you, you won't be successful or you can't do. I have a little plaque on my wall in my office that says, an entrepreneur is somebody who will do something incredible for a few years so that they can live the way they want for the rest of their lives.
Right.
And it's really somebody who's just prepared to like go, gung ho and go all out, and not worry about little details like making payroll or paying the rent, or whether or not you've got enough money to accomplish what you're trying to accomplish. It's somebody who's willing to just go.
I love that. Is there a path they should take? Because you obviously built the accelerator because you wanted to help influence in a positive way the path that these entrepreneurs go on. Can you speak a little to what you've learned over these 5 years and what you believe is a good path from startup to getting yourself into a position where you're relatively safe, shall we say?
Yeah, that's a great question. I think first and foremost, it starts with an idea, right? Somebody's got an idea, and really you want to vet the idea, and you want to make sure it's a good idea. I can't tell you the number.
Not just your mom, right?
Not just your mom, and yeah, for sure.
I love you, son.
Exactly. Well, if your mom says it's a bad idea, quit. But if your mom says it's a good idea, it doesn't mean it is. But look, I see people come in all the time and they say, I've got this great plan. We're going to be the Pinterest for architects, or we're going to be the Facebook for lawyers. And
right.
I say, you're not going to be the Facebook for lawyers because Facebook is the Facebook for lawyers, and you're not going to be the Pinterest for architects because Pinterest is the Pinterest for architects. But have an idea and vet the idea, and be willing to do something that really is unique and demonstrable and affects something. That's what entrepreneurs really are about, is affecting change. And then when you think that you have that idea and you think it's good, then I think you really do have to have some structure. You said, attach yourself to people who have been around and who know what they're doing and can provide good resources. I say that it's that, and it's build a team. And a lot of people think they can't build a team because they don't have the resources to build a team. And I always say to entrepreneurs, if your idea is really good, and if you've thought it through, and if you've developed a model that really works, that's scalable, you should be able to build a team, because you'll find the right people you need. And if they believe in what you're doing and your ability to accomplish it, they'll come help you do it for free or for very little to be in a founder's role. And if you can't convince, like if you're not a technical guy, but you've got this great idea and it needs technical expertise, there are so many technical resources. If you can't convince the right technical resource to come join you before you have money, it's not a good idea. Because you'll find somebody who will say, this is a great idea, and yeah, I could go make $185,000 a year being an engineer, but I'll come take 30% of your company and work for nothing until we get some seed funding, and then take a small salary and turn this into something so that we can all be rich.
But you have to build the team quickly, because we have to fill the skill gaps, right?
Right.
I'm a really strong biz dev guy. My skill gap is always on the logistics. Not so much on the creative. I can be creative like 4:30 in the morning, but on the logistics. But if you don't fill those skill gaps, you can never scale to what you want to scale to.
Yeah, and you can't. So the entrepreneurs that I see that tend to not be so successful are the ones who are really sort of control freaks and think that they have to do all that stuff.
Yeah.
I've got to figure out how to do this, and I've got to figure out how to do the next thing, and I got to figure out how to do the next thing. And really, if you build that team around you, and there are lots of ways to build the team without raising $2 million and being able to go out and pay market salaries for people. That's obviously an easy way to build a team, but there's lots of ways to build a team. And you've got to build the team. You've got to bring in people who are believers and people who really think well of your idea, and then you start to execute.
No, I really like that. And then so you build a team, you've got started, you got your idea, you validated your idea, you've built your team. Is that a good time to try and find a pre-accelerator or wait a little bit longer?
Or earlier. I mean, there are different resources available, and they are available to you at different points in time. So the pre-accelerator connotes what it says it connotes. It's an accelerator for really early stage. When we started the pre-accelerator, it was back in the time when the accelerator craze was sort of happening in the Los Angeles and Silicon Beach market. So
Right.
you had Amplify, and you had Launchpad LA, and you had Mucker, and you've always had Idea Labs, but you had companies like that were providing really substantial resources and capital to companies that were a little further along and well developed and had really good teams.
Right.
And we kind of looked at the ecosystem and we said, both our strength and our value add is at seeing companies at the really early stage, or not even companies, because they come to us as lawyers to form the company. So we see the idea or the entrepreneur or somebody at a really early stage. And we thought we could create this notion of an accelerator that is super early stage. We won't give them money, but frankly, we didn't think they need money at that stage. The idea is they come in, they get co-work. A lot of what you said in the beginning, they get co-working space, they get access to mentors, they get access to important things like coffee and the internet. They get they get really that mentorship and that growth group. We've also now created a lot of not cash but fundamental perk value around. So they get things like storage and Amazon web services and things like that we have partnerships through. And most importantly, they get education and training and mentorship. And so they can do a lot more as one or two or three people starting a company. They can do a lot more than if they're in their garage or their dad's garage and they have a little bit of money and they're trying to go out and sort of buy those resources or create them on their own. And what I know, but I'll tell your audience is there's this giant, big-hearted ecosystem in Los Angeles.
Yeah.
I think it's the greatest in the world. I really do. And everybody at the core kernel has a selfish, profit-driven motive, but they surround that kernel with really altruistic intentions. People are willing to invest a lot in companies in the ecosystem and do a lot to help the ecosystem. And most people, at least the ones that are any good, approach it with sort of a long-tailed view. Just like we do. It's like, yes, we don't make any money on the companies that come through the pre-accelerator or the early stage clients of the law firm because they don't have any money and they're not paying a lot for legal services.
Yeah.
We're basically doing a lot of lost leader stuff. We're doing it because someday we hope they're going to turn into the next Facebook or the next Google, and we're going to make a boatload of money.
Yeah.
I mean, clearly, I'm selfish and I want to make a lot of money.
Of course.
But at the front end, but like you said,
everybody wins.
I can have lots of paying clients that do that and not take that risk.
Absolutely.
We take that risk because it genuinely feels good to help the ecosystem and see companies that can get launched and can get out there and have a shot at making it.
Yeah, absolutely. And just moving to the legal side for a second. So I'm going to ask you to put on your other hat. So they come in. Most companies are pretty unprotected. Would that be fair to say when
Yep.
they're starting off their companies? Because we're all idiots when it comes to legal work. And most people don't have a huge amount of money. So they can't spend a lot of time getting ready for it. What advice would you give to a startup? I mean, firstly, other than just come to your pre-accelerator, but what advice would you give them in other places around the world to make sure that they're fully protected, especially for software companies?
Yeah, they all can't come into the pre-accelerator, obviously, so that's not the solution for everybody. But it goes back to this sort of core theme we've been talking about building the team. Put the right members on your team. There are lots and lots of really good lawyers, lots of them, and you can hire 200,000 different lawyers, and they'll all do a really good job filing your articles of incorporation, drafting your bylaws, creating your internal governance documents, creating investment documents or safe instruments. They'll all do a great job on that. Some of them will charge you a lot. Some of them will be more efficient. But the real issue is don't go. You don't want to go to the ones because somebody says they're a high quality lawyer, because they're all high quality lawyers. Like what I always say to people is that's the floor. You shouldn't ever hire a lawyer because somebody says they're the best lawyers. You shouldn't not hire a lawyer unless they're great. You shouldn't only hire a lawyer that's a great lawyer.
Yeah.
But the reason why you hire a particular lawyer is because they understand what you're doing. They have the DNA that you have. And we're not the only ones who do, but we clearly do. I mean, I'll use us as an example.
But there's very few who truly do. The majority of attorneys will work firstly with later stage clients, but secondly, they're very arm's length. And that's no disrespect to the attorneys, but if the startups are in your office every single day, then you understand the challenges that are facing the startups. So I think the wider point here is, it's not just a question of asking your attorney, how many startups have you worked with over the last while and what have you checked? It's how much do you understand the particular stage that your startup is in, as opposed to just companies in general.
Yeah,
right?
or be even more aggressive than that. It's what are you going to do for me?
Yeah.
And if the answer to that question is we're going to draft really good documents, they're not your lawyers. The answer to that question has got to be, I'm going to put you in an environment where there's lots of resources. I'm going to do your startup legal work and get that all taken care of and buttoned down, and you're going to be totally protected. But I'm going to do that in a model that's super efficient, like we have, and I'm happy to talk about that model. But I'm also going to introduce you to resources, mentors, people who can educate you, people who might be interested in sharing capital with you, people who might be interested in providing services to you on a basis that you can afford, i.e. low cost at the front end and make the money on the back end. It's that kind of support and help. When people come to me or get introduced to me and they say, we're looking for a lawyer, what are you going to do for me? I say, well, first of all, I'm not going to be your lawyer. I mean, I'm going to be your lawyer, but don't hire me to be your lawyer. Hire me to be your partner in growing and making your business successful. Because I'm going to help you solve a lot of problems that aren't legal.
Right.
Because I have this greater experience.
You've been doing this for years, and because you've gone through this process that the startup is going through, it's the first time or maybe the second time, but you've done this hundreds of times with lots of different startups, so it's about being able to predict the problems that come as well.
That's exactly right, and we call that contextual representation. So it's like lots of lawyers can represent you and do a really good job in the legal, but not all those lawyers have the context that you're operating in to be able to represent you and help you solve a bunch of other problems, many of which will be non-legal.
What also really impressed me was when I went into, because I knew you mentored them, I knew you helped them with the legal fees, I knew you gave them space. Your space is beautiful, by the way. Just if anybody wants to picture it, it's on 3rd Street Promenade, which is the preeminent address here in Santa Monica, right beside the beach. So, we're not talking about startups being given some basement where they're all pushed into a little corner. We're talking about the best space in the office being set aside for the startups. But the thing that really impressed me was after they finished the course and the period you bring them through, you then go to all of the friends, everybody you know. You don't just say, well, let's just give you some contacts for some investors that we can do. You put your startups up there, you show them up, they peacock on the front of the room, and then they pitch to all of the investors and get this exposure to investors that otherwise they would never have been able to get themselves. Can you just talk a little bit about the thought process behind that and kind of what you've learned since starting to do it?
Yeah, demo day is fun. I mean, you're describing our demo day. So when companies come into the Precelerator, they go through a pre-programmed curriculum. It's a 6-month program. And there's another class that started 3 months before them. So it's a rolling 6-month class that comes, and they come in every quarter. So you got some veterans in the space, because working with other peers is equally important.
I agree.
Working in the environment with other people who are 3 months ahead of you in the process and have dealt with a lot of the problems is great too. The energy and the chemistry in the room of just, what's bubbling up in the pot when you throw all the ingredients in is pretty cool too. But yeah, they go through this curriculum, they end up at a demo day, and I think again, context. I keep saying context. The value is that we don't just have a list of investors and that we go out, the same 100 investors every time and say, okay, here's the next guy, look at these guys. Here's the next guy, look at these guys. I think one of the reasons why we're respected and one of the reasons why our recommendation will carry some weight is because the investors in this community, and even a large number of them up north that we know that dip down to this community, they know us and they know who we are, and they know that we're not taking a shotgun approach. They know that if we call them and say, I have a company that I think you might be interested in, it's a contextual referral, and that investor is going to know, well, Scott or the people at the Precelerator are not going to call me and send this to me if they don't already understand that it's something that I'm going to be interested in looking at. Doesn't mean they're going to invest in it by any stretch of the imagination, but it certainly means they're not going to come back and go, oh, sorry, we don't do software. Why are you sending this to us? We're going to send it to people that they understand that context and it's important to them. But I will say this, Brian, as sort of a caveat, because a lot of young people who haven't sort of lived through any kind of cycle in this, they think, oh, I keep getting told that lawyers are great at referring you to capital sources, or accountants know lots of investors, and so I should meet them because if I can just work with them, I'll get funded. And that's just not true. I mean, don't come to Stubbs Alderton or the Precelerator because you think that's the reason you're going to get funded, because it's not. You're going to get funded if you're fundable. Yeah. Right. Just like you don't go to, if it's a bad idea and a bad business, but you somehow con Brian McMahon into letting you into Expert Dojo, you're not going to get funded because investors aren't stupid. Yeah. Places like Expert Dojo and places like the Precelerator help you get funded, but they aren't. You're not going to get funded because of them. They're just going to get you to the right places and in the right discussions. You have to ultimately have the kind of idea and get the kind of traction and be the kind of personality and have the kind of energy that gets you funded.
I think it's a great point. I remember when I first came here, I would hear a lot of startups say, well, I'll pay this amount per hour for the attorney because they have access to these great investors that they can introduce me to. And I always remember thinking at the time, the objective of going with an attorney is that they prepare you for the road ahead so that you're safe, right? It's not to introduce you to investors. If you end up being part of a community whereby that's all put in on top, brilliant. But you choose the people. It's each one of your specialists for their specialization within that space. So I'm with you. And the way you did it, it's not just about introducing someone to investors. It's about providing an entire program for the startups where there's a beginning, there's a middle, and there's an end. And that end is there to tell the startups if they're ready. And I'm sure many of them are not going to find investors directly on that demo day, but what it does for them, which I love, is it gives them the truth. Because every single investor who was there was massively engaged with question after question after question to try and immediately do due diligence on the startups themselves.
Yeah. That's true. Look, not everybody's ready for prime time, and we've actually had companies that we expected to go on at demo day, and like the week before, we make a decision where we're pulling them out and not letting them do demo day because they're not ready.
And then you'll just put them back in the next time.
Yeah, and then they would cycle them back into the next one.
How do you feel about startup today?
Well, I mean, I love it. It's obviously I spend a lot of time and energy doing it. It's the most gratifying to me. I feel like it's a lot of fun, and I think the stuff that's happening is amazing.
You think it's more than before? Like I just feel with Bird's valuation, with obviously Dollar Shave Club was a little while ago. Peter Thiel is looking to move down here. There's other major entrepreneurs looking to move down here as well. I on one side of it, times like this kind of scare me because they're normally just before a bubble. But on the other side of it, it's tremendously exciting because I almost feel like the center of the startup universe is moving towards Santa Monica.
Yeah, I'm not a bubble advocate. I don't think we're in a bubble. There's geometrically greater activity right now than there has ever been. That's true. Yeah. And there's a lot of money in the market, and there's a lot of early stage money, which is good. But I lived through the bubble, by the way. I mean, I was around in 97 and 98 when the dot-com bubble, first burst. Me too. And the difference was that what was getting funded back then was being funded out of exuberance and not out of brilliance. And so there was a lot of stuff that was being funded with no sort of rational basis for it being funded. So when it started to blow up, it all blew up because then people started to turn around and look at the companies and go, these companies really, can't possibly make it. You can't make up, you can't have a company that makes no money, but they're going to make it up by doing lots of transactions. It's like, that doesn't work. So I think the difference is that over that, from that period of time till now, the quality of what people are working on, the quality of the company have gotten way better. And they've gotten better in large part because the quality of the resources have gotten so much better. I mean, there are places like Expert Dojo and stuff like that. There's technologies. Like you got an iPhone sitting in front of you. That iPhone has more resources in it than what anyone could buy in a $2 million financing in 1997.
Yeah.
In that device. And those are the kinds of things that make this great. And obviously a small percentage of startups will ultimately succeed. But the ones that do are really doing amazing things.
Yeah, I love it. So let's say put yourself in your shoes today, but you're not an attorney anymore. You don't have the pre-accelerator. You're a startup, and you're looking back on all of the mistakes that you've seen from startups over the years. What mistakes of those are you going to avoid when you're starting your business?
The biggest mistake I think startups make is they work really, really hard at raising money, and then when they get it, they act like they have it, and they spend too much. I think the mistake that I would avoid, and by the way, we did a startup called Flash Funders, which was a
crowdfunding
platform.
Yeah. Gregory ran that, right?
When the Jobs Act passed, we looked at that and we said, a really good broker and a really good law firm could put together a platform for this kind of crowdfunding that the Jobs Act's envisioning, and it could be really big. And so we went out and we did it, and we raised lots of money, put a lot of our own money into it. And I think we made the mistake that I think a lot of startups make, which was we spent way too much money before we knew. Because software development is really interesting. People always joke, they say, oh, it takes twice as long and costs twice as much.
Right.
And that's true, but there's a really good reason why it's true, and that's because and this is true of every software I've ever seen, and I've seen a lot of them. You don't know what you're building, even though you think you know what you're building. You don't know what you're building or what's wrong with it until you've built it. And so you spend the money you think you're going to spend building it. It takes a little longer, costs a little more to get to where you think you're going to get to. And then you get there and then you go, okay, now that I've got it, I see why it doesn't work and what all the problems are and why all the mistakes I made in building this. Now I got to go back and rebuild it. And sometimes it's iterative, but sometimes it's not.
Yeah.
The first platform we built for Flash Funders, we threw away. We literally threw away, and we rebuilt it. And so that's part of the process. So the mistake that I would avoid is, I would say, be super, super cautious when you build and super cautious as you develop to really understand, what it is you're building and where it is you're going.
I couldn't agree more.
Now, having said that, I'll give you what might sound like contradictory advice, but it's not, which is, having said that, you have to go.
You can't pontificate.
Yeah, you have to go. You can't sit there making it perfect and making it perfect and making it perfect. You have to go. Another great example and a great story I'll tell you is we were, I think you know this, but we were the startup lawyers for Skype, and we were early investors in it, which we did very well. We knew that we met the founders at an early stage, and we helped them. I literally formed the company. I did all the corporate work to form the company. And one of the things that they were truly disruptive. So not every startup is really disrupting the way they disrupted. I mean, they made phone companies go away. So they were super disruptive. But they had a software platform that's pretty commonplace now, peer-to-peer software that was making calls over the internet, voice over protocol, all that sort of now commonplace and really pedestrian, but it was really revolutionary. And it had glitches. It was choppy. The voice didn't really work that well. And the biggest thing that they did most successfully was they launched it and they went. And the analogy that we used to use back in those days was we used to say, you got the rocket on the launch pad, it's fueled up, it's ready to go, but you know that there's a lot of problems with that rocket, and so you don't want to launch it. But if it sits on the launch pad forever, it's never going to launch, and somebody else is going to launch a rocket, and you're not going to get into orbit before them. So throw a toolkit on board and launch it, and we'll start heading to space because it takes a long time to get there. And while we're on the way, we'll use our toolkit to fix it.
Yeah. Yeah. There's a lot to be said for it. Like you said, it's not – there's no – so I I sit right in the middle of those two things you've said, because everything is based on the individual company and what the company are doing, right? For me, if you're building a good milestone plan, you're able to reiterate quickly enough. The challenge that a lot of startups have is they build it, they put it in place, they make tiny tweaks, then it's too late. They run out of money, they run out of time, they don't have any customers, they can't raise, and they can't afford to restart all over again. So it's to be able to get to that reiteration with your toolkit right at the start and be able to do it at the beginning. I love that.
Yeah.
What type of sectors do you like right now? Industries?
I like SaaS software
Yeah.
a lot. I think it's just from an economic standpoint, it's just such a great model because there's so much margin and it's so scalable. So I like that a lot.
People keep paying you.
And people it's recurring revenue.
I love recurring revenue. Oh,
who
God
doesn't?
bless recurring revenue. It just comes in the morning. Thank you very much.
Exactly. So I like SaaS software a lot. But I'm also super enamored with virtual reality and augmented reality. Now what's being called mixed reality because the lines are blurring between all that stuff. I'm super psyched about all that stuff. I think, I was one of the really early people who fell in love with Amazon Echo and Alexa. And now, of course, there's Google Talk and Siri trying to do some of the same stuff and all that. But I think that platform is absolutely amazing. I think that it's going to entirely change everyone's lives. So many things that we took for granted, just day-to-day things like the remote control in your hand, will just go away.
It's like the next internet, right?
It's like the next internet. It really is. So I think that those things are amazing. And then the last area that I'm super enamored with is the blockchain, and not Bitcoin. Bitcoin and cryptocurrencies are fun, and everybody's doing them. And I think that there is a bubble, and there will be a bubble, and companies will blow up, and people will lose lots of money.
Yeah.
But outside of the currency part of it, the blockchain itself, just as a mechanism, as a vehicle, is going to change the world. It's going to be as significant as the internet. It's going to be a way that we do really secure transactions. It's going to solve problems like identity theft and cyber hacking and all that kind of stuff. The blockchain is ultimately going to be the thing that solves all that.
As an investor, how do you get into that space?
You look for unique companies that are doing that are creating blockchain technologies.
So ICOs.
Yes and no. I think you got to be wary. So like I'm seeing lots and lots of ICO opportunities. And I think you have to be very wary. Some of them,
I agree. Some of them are awful.
Some
of them couldn't raise $100 from their mom.
Let me go back in time.
And now they're raising 20 million.
Let me go back in time for a minute, okay? Pre-internet, back in time, in the mid '90s, when there was no internet and there was nothing like that, companies used to do initial public offerings of their securities. Registered initial public offerings with underwriters to raise capital. Now no one does a public offering to raise capital anymore. They do a public offering when they already have $1 billion valuation and they want liquidity and they want that kind of stuff for their shareholders. But back in that time, you might be a company that was relatively early stage. You're making $5, $10, $15 million in revenue, and you go out and raise $5 or $10 million in an initial public offering to public investors, at a fantastic valuation, and you got this great valuation because investors cared less about, now mark my words, didn't not care, but cared less about your business and the quality of your business and whether your business could ultimately sustain or be successful or anything like that. They cared less about that. They cared more about the fact that you were raising money in a way that had tremendous liquidity and around a business model that had a lot of sizzle. So they wanted to jump in, buy in the initial public offering or at a price around the initial public offering, ride that up with the sizzle and sell out. It was about the transaction where they wanted to make their money, not the business, okay? So now and then all that went away because it basically got regulated out of business with Sarbanes-Oxley and all that because a lot of it was borderline fraudulent.
Ponzi, yeah.
Even the ones that weren't fraudulent, the concept back then was, I'm going to raise $5 million, which is way more at a valuation, and sell 20% of my company for $5 million when I'm doing $15 million in revenue. So way higher valuation than I should ever get. And I'm never going to be able to raise money again, ever, because unless I'm successful, because if I don't increase the metrics of my business, the fundamental economic metrics of my business,
it's all over.
It's all over because I'm going to be a penny stock, and now the market's going to be saying my company's worth $5, and so I'm not going to be able to raise more money. So I get this one shot to go out and raise a bunch of capital at a really high valuation, and I get to use it in my business to make my business successful or not, and that's my shot. So now we fast forward to initial coin offerings. The same thing's happening, right? It's like I create this exciting, sizzling story about how I'm going to create a token that's going to be utilized within this business, this mythical business that I'm creating. Haven't even created the business yet. And I'm going to go out and sell that token. And why are people buying it? Not because they believe in my business, not because they think the token is going to have great utility because I can use it to buy X, Y, or Z within the business. They're buying it for one reason and one reason only, because they're getting it at a penny. And they're looking at what Bitcoin did and Ethereum did and Litecoin did and Ripple did and all those currencies. And they're saying, wow, if the business does catch on and people start to use this currency, my coin that I bought for a penny, I'm going to be able to sell for $50. I'm going to be a millionaire, a billionaire. And so it's the same thing. Those companies have their one shot. They're raising all this money from seemingly unsuspecting and unaware investors. They're going to make a boatload of money from people who are only hoping that the coin does well. 98% of them, the coin's not going to do well.
No, they're going to fail. They're
going to fail. The coin's going to become useless and valueless, and they'll have thrown that money away, and the business won't do anything because they didn't. But there's going to be those 2 or 3 or 5 or whatever percentage it is. I don't know. But there's going to be those handful of them that raise their $30 million in an initial coin offering and actually do make a real business out of it. It's almost the same thing as what we saw back in the mid-90s.
So we've got to be really careful. But ICOs are interesting for sure.
But getting back to your point, but the blockchain is what's really interesting.
Yeah,
the blockchain is amazing, and so investors should be looking at what fundamental technology is a party creating, and don't look at the sparkly thing, which is the ICO. Look at the real thing. What technology are they creating? How does it work? Is it protectable? Is it defensible? Are they getting out in front of other people? Are they going to develop a large user base? Are they solving a big problem? Look at the fundamental business metrics.
It's no different, right?
Brian.
Yeah.
No different.
It's the same. It's a funny space, though. I do. Whenever I want to laugh, and I love it too. I think that cryptocurrency is possibly one of the 2 disruptions I never expected to happen. Money and healthcare, right? In my lifetime, you can't move those 2. You can make little things, but you can't move those 2.
Right.
And they're both happening, so I think it's phenomenal. Last couple of little things, quick fire for you. Right. Okay. Number 1, tell us best advice you ever received.
Be your own person, be your own brand, take ownership in what you do. Don't blame it on anybody. It's you own it.
I love it. Own it. What about favorite book?
Favorite book is The Hard Thing About Hard Things.
I don't know that book.
It's Ben Horowitz, who's the Horowitz from Andreessen Horowitz.
Wow.
And the reason why I like it so much is because it's about leadership. It's about creating Facebook wasn't easy. It's hard. Hard things are hard, and that's why they're hard. Yeah. It's a great book. You should read it. You really should read it. But Hard Thing About Hard Things is great. And my second favorite book is Wooden, which is the book written by John Wooden, which was his observations and thoughts about things on and off the court. And I love that book because that's about integrity. And you can't be successful long term without your integrity.
Man, it's all we got.
And that doesn't mean that some people won't be. There are cheats in the world who are successful.
Yeah.
When people say crime doesn't pay, that's not true. Crime does pay, but it only pays in the short term, and it only pays for a minority of people. But if you're willing to give up your integrity, you've lost everything.
I remember my dad said that to me once. He said, "You know how exhausting it is to have to remember all the lies you told?" He said, "It's really hard. It's so much easier just to tell the truth. You just don't have to remember
so
anything."
Funny you say that, because that's one of John Wooden's. There's a whole list of John Wooden's infamous quotes. He's a great quoter, and that's one of his quotes: is "Tell the truth. It's so much easier than remembering all your lies."
It's true. Favorite gadget right now?
Amazon Alexa.
Yeah, I love that too. Okay. What do you see as the biggest industry in 2018? I know you've already said what the spaces that you like, but what do you think is going to blow up this year?
In 2018, I think it's going to be augmented reality.
Really?
Yeah.
Not AI? Not last mile logistics?
So I sort of lump all that stuff together. Augmentation, artificial intelligence.
Okay, yeah. Okay.
I sort of lump all that stuff together. So yeah, thanks for correcting me. I mean that. I mean machine learning and that kind of augmented stuff that will make your life better and get to know you and make you better and better, or make your product better and better.
I love it. Any final piece of advice for entrepreneurs before we go?
Gosh, we've covered it all. Work hard. Be honest, and just build a team around you. You don't want to be the smartest guy in the room. You want to be the dumbest guy in the room.
I like that. In that case, this is why I'm so happy here. Hey, Scott, you're a great friend to me. You're a great mentor to all of the startups in the Silicon Beach area. I, without any hesitation, say to anybody listening to this podcast, if you're looking for a great attorney to take care of you for your startup needs, speak to Scott. And for anything else you ever need, just reach out to me and I'll catch you. What's your email, Scott? Or an email maybe for Haiti or somebody in the office?
It's salderton@stubbsalderton.com.
Okay, beautiful. You heard it right here. That's a wrap. Until next week.
Thanks, Brian.
Thanks for joining us. If you know any other entrepreneur equally ambitious as you, then share this podcast by paying it forward to other entrepreneurs who are building your own army. Now, as always, our website, expertdojo.com, is packed with information to help you grow your business, find investment, and train for victory. We also walk our talk and invest in startups every year in our accelerator here in Silicon Beach. You can always reach out to me at brian@expertdojo.com, and I look forward to being back here again at our regular time next Tuesday, 10 a.m. with another of the world's top investors, helping you win the war against startup failure.